Okay, let's talk about silver. It has been on an absolute tear, right? Smashing records, grabbing all the headlines. But you know how it is. Whenever a price shoots up this fast, you've got to ask the big question. Is this a massive bubble that's just waiting to pop? Or are we looking at the ground floor of an even bigger opportunity? Well, that's what we're going to find out.
I mean, just look at this number. Silver recently blew past a huge milestone here in India, hitting 1 lakh rupees per kilogram. When you see a big round number like that, it makes everybody stop and ask, whoa, what on earth is going on here?
And that really is the heart of the matter, isn't it? Are we looking at the absolute peak, a sign to maybe stay away? Or, despite these new highs, is silver just warming up? To get a real answer, we first need to take a little trip back in time.
So let's see what history has to teach us. Because believe me, this isn't the first time silver has seen this kind of frenzy. And if we look at the past, well, there are some pretty serious warnings we need to pay attention to.
You see, silver has this wild history of these huge boom and bust cycles. Back in 1980, there was a massive run-up that ended in a just spectacular crash. Then it happened again in 2011, another huge rally followed by a painful drop. So now, here we are, at new highs, and you can't help but feel a little bit of déjà vu, right? That 1980 event, people call it Silver Thursday, it's really the classic cautionary tale. It was a textbook speculative bubble. You had these two guys, the Hunt brothers, who used their massive fortune and a ton of borrowed money to try and corner the entire silver market. Of course, when the regulators finally stepped in and turned off the money tap, the whole thing collapsed. It's a perfect example of how dangerous a market can be when it's driven by pure speculation instead of, actual fundamentals. But what if I told you that the price chart that everyone is staring at might just be the wrong chart? This brings us to what I think is the most important part of this whole story, understanding what the real price of silver is.
No, seriously, are we? When we see a chart hitting an all-time high, our gut reaction is to think, wow, this is the most expensive it has ever been. But that gut reaction, it might be totally misleading us.
So take a look at this. On the left, that's the nominal price chart. It's the one you see on the news, showing today's price as the highest ever. But now look at the chart on the right. This one is adjusted for inflation, and it tells a completely different story. When you factor in how much the value of money has dropped over the years, today's silver price isn't even close to its past peaks, not even in the same ballpark. Here's a really simple way to think about it. Imagine a street snack, like a tikkie. Maybe it costs just a couple of rupees when you were a kid. Today, that same tikkie is probably more than 10 times that price. The tikkie itself hasn't changed, but the value of the rupee has. Well, that exact same logic applies to the price of silver. And the numbers? Wow, the numbers really make this crystal clear. That peak in 1980 of about $50 an ounce, in today's money, that would be like $200. The 2011 peak of around $49, that's about $72 today. And where are we now? Around $47. So what this means is, in real inflation-adjusted terms, silver has a long way to climb just to get back to where it's been before. And knowing that changes everything, doesn't it? It lets us look past the whole is it a bubble debate and ask a much more interesting question. Are there actual fundamental reasons why silver could reclaim those old highs and maybe even go further? Let's dive into that. So, the first big reason is a classic supply and demand problem. For the past few years, the world has been demanding way more silver than miners have been able to pull out of the ground. We're not talking about paper speculation here. We're talking about a real physical deficit. Some of the big vaults in places like London are even reporting shortages. And it's simple economics. When more people want something than is actually available, prices tend to go up. And here's the kicker. You can't just flip a switch and make more silver. A huge chunk of the world's silver isn't mined directly. It's actually a byproduct of mining for other metals, like copper and zinc. That means miners can't just decide to go get more silver tomorrow. The supply just can't respond quickly when demand suddenly surges. So where is all this crazy new demand coming from? Well, it's coming from pretty much every major technological revolution that's happening right now. Silver is absolutely essential, and often there's no substitute for it. In solar panels, electric vehicles, 5G cell towers, and even the computer hardware that's powering the AI boom. This isn't just a temporary fad, it's a deep structural shift in demand. Just to give you some perspective, a single electric car needs somewhere between 25 and 50 grams of silver.
Now multiply that by the millions and millions of EVs that are expected to be sold around the world. Yeah, you can see how that demand adds up incredibly fast. Okay, so the fundamental story looks pretty strong, but we know the price can be a roller coaster. So how should an investor even think about approaching this? That brings us to our last section, strategy. So the most recommended approach is what's called a systematic investment plan, or SIP. The idea is simple. Instead of trying to time the market perfectly and throwing all your money in at once, which is basically impossible, an SIP lets you invest a smaller, fixed amount on a regular schedule. If the price goes up, cool. If the price goes down, your fixed amount actually buys you more silver, which lowers your average cost. It's just a really powerful, less stressful way to handle the volatility. Now, where you put your money is a huge deal. On the left, you've got silver mutual funds. A lot of these are what's called a fund of funds. All they do is take your money, buy a silver ETF with it, and then charge you their own management fee on top of the fee the ETF already charges. You end up paying double. On the right, you have the silver ETF itself. If you buy that directly, you only pay one single, lower fee. It's a no-brainer.
And this isn't some rare thing. The vast majority of silver mutual funds, especially in a market like India, are set up this way. It's just an extra layer of fees that does nothing but eat away at your returns over time. So the key takeaway here is simple. Always look under the hood and go for the most direct, low-cost option you can find.
So to wrap up the strategy, it's really just 3 simple steps. Number 1, choose the right vehicle. Go for a low-cost silver ETF, not a mutual fund that charges you twice. Number 2, choose the right method. Use an SIP to average out your costs and take the emotion out of it. And number 3, and this is a big one, avoid putting in a big lump sum of cash all at once, especially after the price has already shot up and the market is feeling a little too excited. Which kind of leaves us with one final big question to think about. For centuries, gold has been the king, the ultimate store of value. But in a future that's going to be built on green energy, on electrification, and on artificial intelligence, a future where silver is an absolutely essential industrial metal, could it be ready to take on a new role? Could silver be the new gold? That's something to think about. Thanks for tuning in.